Matthew Sherwood, thanks for joining us. You've argued in your Perspective newsletter that you believe the recovery is V-shaped in Asia. What role will the emerging markets play in Australia's recovery?
Well, I think they'll play a very large role. Australia is increasingly orientating its economy towards Asia and away from its traditional trade links with the US, the UK and Europe. And for example, 20 years ago, only a third of our exports went to Asia. Now that's increased to 2/3. And with Asia continuing to urbanise and industrialise their economies, we're not only in the right geographical regions, but we also have the right products they want, large endowment of natural resources, coal and iron ore. So that's really going to set our economy up well for the export front, and that in turn has a big impact on investment in the mining sector. And when you combine that with Australia's very strong population growth and government with no real levels of debt concerns, I think the Australian economy is set up very well for the next couple of decades.
Just looking at Australian equity markets and bank shares, do you think they're overpriced?
Bank shares are a bit mixed at this stage. You'd probably look at them now and you say, yes, they are expensive, but we have to remember banks are very different now to how we might have viewed them 5 years ago. Most of their competition has disappeared and it's been taken over, and they've bought market share at very cheap prices. And so with the economy recovering also, you'd have to say it's not going to have too many difficulties reaching their earnings forecast. The risk is the valuations, not the earnings. So at this stage, we think they're slightly expensive, probably more than they should be. And we have in very early November seen an adjustment in their prices. They've been hit quite hard with selling pressures. And so I'd probably say now, I'd be guessing in early November, they're around fair value. So I think they're going to have very strong earnings growth in the next few years, given that they've captured market share.
Where are the opportunities for investors in 2010?
I think there's a range of products that investors might look for. I would say something like an industrial share fund with the majority of industrial shares ex-banks having some degree of attractive values. You might argue that the resource sector and the banking sector are expensive relative to history. So other industrial shares are actually looking reasonably priced at this stage. Other investors might be, say, looking at a credit fund as credit spreads continue to come in with the economic outlook for the country still very strong. You'd expect yield spreads to come in, and so that might offer some additional revenue positive returns for investors. And so something like a diversified income fund or a credit fund might also have some opportunities for investors. Type of products which people might be looking at really depends on their investment tolerance for risk and return. Some people have started to increase their exposure to geared share funds given the growth they are expecting in the Australian economy in the next 5 years. That's one prospect. In these sorts of environments, though, it's very important to keep your eye on risk. Usually in a bull market, risk is the first thing that's thrown out the window, followed by any semblance of common sense when it comes to market valuation. So it's always important to keep your eye on those two metrics, because as we learnt from the subprime crisis, the game can change very rapidly and you can have trouble liquidating overvalued stocks. That's why we continue to monitor stocks for their quality in terms of their balance sheet and earnings, and also their valuations.